Welcome back, looters. I am your host on Tick to Loot, the channel where we turn ticks into treasure. Today we are on Lesson 8.2 of Unit 8, Price Action Trading. In this lesson, we're going to cover the basics of reading candlesticks, including what they mean and how to interpret them. By the end of this video, you will understand how to read candlesticks like a pro and apply this knowledge to your trading. Let's get into it. So, let's start with the basics. A candlestick is made up of three main parts: the body, the upper wick, and the lower wick. The body is the main part of the candlestick and represents the open and close prices. The upper wick represents the highest price reached during the period, and the lower wick represents the lowest price reached. Think of it like a story. The body is the main event, and the wicks are the attempts to go higher or lower. A large body on a candlestick indicates strong conviction from buyers or sellers during that period. If the body is green, it means buyers were in control, and if it's red, it means sellers were in control. Think of it like a vote. A large body means the majority of traders agree on the direction of the price. On the other hand, a small body on a candlestick indicates indecision. Neither buyers nor sellers are in control, and the price is stuck in a range. Think of it like a tie. Neither team is winning, and the game is still on. A long upper wick on a candlestick means that the price tried to go higher, but was rejected by sellers. It's like an attempt to break through a ceiling, but the sellers pushed back and kept the price down. A long lower wick on a candlestick means that the price tried to go lower, but was rejected by buyers. It's like an attempt to break through a floor, but the buyers pushed back and kept the price up. A doji candlestick is a special type of candlestick where the open and close prices are equal. It's like a perfect tie. Neither buyers nor sellers are in control, and the price is stuck in a range. A doji can signal a potential reversal, as it indicates that the buyers and sellers are evenly matched. The timeframe context of candlestick is also important. A daily candlestick tells a bigger story than a 5-minute candlestick. Think of it like a book. A daily candlestick is a chapter, while a 5-minute candlestick is just a sentence. The daily candlestick gives you a better idea of the overall trend, while the 5-minute candlestick gives you a more detailed view of the short-term price action. Now, let's put what we've learned into practice. Take a look at this chart of euro to US dollar on the H4 time frame. We have 20 candlesticks here, and each one tells a story. Try to describe what each candlestick means using what we've learned so far. What's the body telling you? What about the wicks? Let's take a closer look at this candlestick. What's the body telling us? Is it large or small? What about the wicks? Are they long or short? Use what we've learned to describe what this candlestick means. Let's summarize what we've learned so far. We've covered the anatomy of a candlestick, what large and small bodies mean, how to interpret wicks, and the importance of time frame context. We've also practiced applying our knowledge to a real chart. That is everything for Lesson 8.2, Reading Candlesticks. If this helped you, smash that like button and subscribe to Tick to Loot so you never miss a lesson. Drop a comment below. What was the most useful thing you learned today? See you in the next lesson, looters. Keep turning those ticks into treasure.